The good reputation of the corporation is at stake of being tainted if the challenges were not solved. The root cause of the challenges in the corporation has been claimed to be poor governance within it since the corporation's creation. It was under the management of Jack Ma until 10th of May 2013 when he stepped down. Jonathan Liu became the new CEO, and since then the corporation has been taking significant steps. For instance, the IPO venture in 2013 happened under the management of Liu. However, governance issues did not disappear even after Liu's management beginning. An example of the governance problem is the failure to be allowed to Hong Kong Stock Exchange. It was largely contributed by poor and violated governance within the corporation. Poor governance was illustrated when the corporation was asked by the Hong Kong Stock Exchange to base its operations in the stock market in terms of one share, one vote. The corporation could not keep up the request by HKSE. Nonetheless, Hong Kong authorities rejected the dual-class share structure proposed by Alibaba. The corporation did not want to lose the monopolistic governance, thus they rejected the legal request by HKSE. The loss of Alibaba cost the HKSE an estimated $200 million, HK dollars, which will have added 2 to 3% to the exchange's 2013 revenues. As a result, the corporation was delisted from the HKSE listings.
Next, about mistreatment of the investors. Poor governance within the corporation is also demonstrated through the disadvantaging of investors by Alibaba, and most investors were eager to be involved with Alibaba Holdings due its market success and its luring IPO. However, the investor failed to see the corporation's poor governance. The insiders exercise their permanent control in the corporation. They hold a very small ratio of equity capital. In the corporation, there are several ways to divert value to the affiliated entities, but the mechanism to prevent it are totally weak. This means that the amount of wealth the corporation accumulates as a profit wouldn't be shared among the shareholders who have invested in Alibaba Holdings. This fact leads to disadvantage of the shareholders because they are not able to return their investments. Therefore, the poor and violated governance of the corporation leads to mistreatment of the investors.
The biggest problem of Alibaba corporate governance is management powers because Alibaba corporate governance structure lack of stockholder rights and independent board representation to select board members and have a nominal in the management of the company. In Alibaba, it has a permanent local control of the company but hold only a small minority of the equity capital known as Alibaba Partnership. In the case of Alibaba, investors need to worry about the relatively small stake held by the members of the controlling Alibaba Partnership. All those factors show Alibaba's structure does not provide adequate protections to the public investors. Unsound policies made by the management of the corporation also reveal the existence of poor governance. Dependence of the corporation on a small range of products and services may be an unsound policy of its activities. This happens because it leads to the corporation's over-reliance on a small customer base. Alibaba Holdings shows this negative feature due to the fact that it relies on the customers for its survival in the market. Furthermore, it relies on the online customers in terms of making profit. This grants the potential to customers in order to dictate price and margins for the corporation's products. Consequently, the corporation is placed at risk of losing customers anytime through insolvency or losing the customer to a competitor. This makes the corporation to be always cautious of the customer's strengths. Therefore, the Japanese policy proves to be a sign of poor CG and might violate their transparency principles.
And for the conclusions, the problem of poor governance has also affected potential investors having interest in investing into the corporations. The sole source of governance issues has been monopoly management in the corporations. And next, recommendations. We have 3 recommendations for Alibaba to improving their corporate governance strategy. The first is the corporation should enhance management diversifications. This would help in ensuring the monopolistic nature of the company is eliminated. And the second is enhancement of the company's adaptability to future change. This would give the company good chance to successfully accept the future legal, technological, and physical challenges. And the last is the company should be involving the shareholders in management. This would help to reduce unsound management policies. By the implementations of the following recommendations, of the 3 recommendations, the company may be able to evade poor governance issues. It may also be able to reap profits of good governance and its principles.